Next, friends, it happens many times in the business that business is sold out to some other person. It happens so many times that companies are got merged and new companies coming out because of merger, demerger, amalgamation, lease and all. As I told you that because of this market in the when the business transactions, people take so many options to run the businesses. So each and every aspect of the business is taken care by the GST law, which helps a lot to all stakeholders to compliance under the indirect taxes. So here question comes again that if business is sold out, so 2 or 3 existing companies merged together and the new company came out. So all these merging companies having stock on that particular day on which they have already paid GST to their suppliers, and they are entitled for and they have claimed ITC on such goods. That goods may be in form of raw material, store and consumables, maybe in WIP, maybe FG. So when 2 or 3 companies merged and new company has emerged, whether ITC will be available to the new company which has purchased all these companies, or holding company has taken over the assets and liabilities of subsidiary company or some other company. Then answer is yes. Answer is yes. ITC balance lying in electronic credit ledger. Electronic credit ledger we will discuss in the following slides when we will talk about returns, can be transferred to new person. So any business is sold out to a new one, or 2 companies are merged and third company has come out, ITC will be available to the new person or the new company coming out with the new GST number. And condition is the registered person, the merging companies shall declare their goods, their stock to the government, to the state GST department or the CGST department. Next, friends, question is, if any registered person whose supplies become exempted, earlier example was exempted but become taxable. Here goods were taxable earlier, but because of government notification, goods now become exempted. Or he becomes composite dealer, means he was regular dealer, he has a GST registration, but now because his turnover is not crossing 1.5 crore limit or 50 lakh rupees in service, as the case may be, now he has decided that instead of having this GST registration, we should go for this where compliances are less. If ITC is available, or he has to reverse back the ITC, whatever he has claimed so far. So friends, when your products are becoming exempted, I told you, for availing ITC, for claiming ITC, your final product must be taxable. Here, earlier your product was taxable, but now it is exempted because of government notification, the change in the law. So whatever ITC you have availed or claimed shall be reversed. He has to pay back. He has to reverse it, he has to pay back. So ITC is not available. Similarly, if a normal dealer now becoming composite dealer, because composite dealer I told you they are not eligible for ITC on their procurement because they are not charging tax to their customer in their invoices. So they are also supposed to reverse ITC, whatever he has claimed. Next friends, in case of capital goods, because it is your asset, you are not trading, it is your asset in your balance sheet. You are using these assets over the years for manufacturing purposes or to deliver services, on which ITC was availed when you purchased these capital goods 2 years back, 3 years back, 4 years back, maybe 5, 6 years back, when you purchased some machinery and machinery was subject to GST at the rate of 12%, and you availed that 12% as your ITC. You have availed and also to the extent utilized also, maybe fully or may not be fully. And now you are selling this product, selling these goods. 5 years back, you purchased one machinery of 1 crore rupees, on which 12% GST was paid, means 12 lakh rupees. You use this machinery for 5 years, though it has its life for 10 years. Now you are selling this machinery for 60 lakh rupees. So this 12 lakh rupees which you claimed at your ITC, and during 5 years of its use, you consume, you avail, you utilize also this amount of 12 lakh rupees. Maybe your turnover is so high that you have consumed 100%, or you might have consumed 80% only, or you might have consumed 40% only. Then what? If such capital goods are sold out or disposed of, on which ITC was availed and utilized, here word is availed and utilized. You have availed also, you have utilized also, maybe fully or partly. In that case, dealer, means the person who is having these goods, has to pay back the amount equal to ITC availed. There is a formula given in law, back equal to ITC availed reduced by 5% per quarter from the date of invoice of such. So means whatever amount you have claimed and availed or utilized, but you are supposed to reverse back, supposed to pay back ITC 5% per quarter, 20% per annum. This much amount you are supposed to reverse from the date of the capital goods purchased. The tax as per the rate applicable on transaction value of such capital goods, whichever is higher. Word is or. So this amount you have calculated, or the tax as per the applicable rate on transaction value, means here we purchase product, this goods, means machinery, for 1 crore rupees. Now you are selling it for 60 lakh rupees, and GST rate was 12%. Same rate will be applicable over here. So on 60 lakh rupees, GST will be 7.2 lakh rupees. When you purchased, you availed 12 lakh rupees. Now you are selling it. You are supposed to deduct, you are supposed to reverse, you are supposed to pay back to the government, because you have either consumed 100% or maybe 80% or maybe 40%. So this much of amount or this much of amount, whichever is higher, that much of you have to reverse. So whenever you are selling your capital goods on which ITC is availed and utilized, you must deal the transaction very carefully. And if asset is sold as scrap, In previous example, asset was working in good condition, but some of the other reason you are selling it. Here now asset is scrap, maybe because of some accident, maybe some fire took place or any reason, maybe due to some obsolete technology, and you have availed ITC on this particular asset which have been scrapped now. If asset is sold as scrap, and scrap is subject to 18% GST. If you are selling it as an asset as it is, because it is in use, it is operational, and you are selling it as a capital goods only, second hand capital goods, then the rate applicable on that particular capital goods will be applicable. But when it is sold as scrap, then rate of this GST will be 18%. So take care when you are selling or entering into such type of transactions, because it is related with ITC. You have availed ITC. Friends, this is another aspect of GST ITC which is very, very important from business point of view, and it has its own role, its own place in GST and business also. In industry, especially in engineering industry, automobile sector, it happens many times that we send material for some processes to third party, because we don't have that facility, or if that facility we start establishing in our own factory, it may be costly one. So we identify the vendors, such people in the market, decide rates with them, and start getting jobs from them. They are job worker for us. They give their service by having that particular process on our material. It happens, it's very common practice in market. So if I am in any type of industry and I have my business in Mumbai, and I am procuring my raw material or component from Jamnagar, and on this raw material or component, before using or before put these items into use for my final product, I need some process to be done, and this process is being done at Jamnagar itself by some other party. They have specialization, means this raw material, this component needs some heating process, a very specialized job work, and a party in Jamnagar itself has that facility. So what I am doing, I am procuring this component or raw material from Jamnagar vendor or the Jamnagar supplier, and before bringing this material to Mumbai factory, I am sending this component to this job worker for that particular treatment, and it takes 1 week time, and then from here I bring these material to my factory in Mumbai. So friends, in this case, if I take a route that first I will procure this material from Jamnagar, then take it to my Mumbai factory, and then again will send Jamnagar for job work purposes, is not viable under the business. It will make my business loss making venture. So law permit me, there is a provision under GST law, in such type of situations, you can send this raw material directly to your job worker after procurement, and after that process, this job worker will send material to you. There is a set procedure under GST law. It is allowed. It is a process where 1 week is required, but there are some cases where maybe 2 months or 3 months are required to complete this process. So we need to understand this very carefully, and we need to use the relevant documents, as I told you, that here when raw material is procured, it will go to job worker, bill will be available at Mumbai, and from job worker in Jamnagar, material will come to Bombay with relevant documents, e-way bill also, job worker bill also for his heat treatment process, and accordingly transaction will be undertaken. And if material is lying with job worker and I have received this copy of bill for payment purposes, because my vendor who has supplied me, I have different terms of payment with him and I have different term and condition for job work differently. So I need to make payment to this supplier because he has supplied material, his work is over because as per my instructions, or I have taken delivery from his factory and delivered this material to my job worker. So I need to pay to this supplier. I will pay it. When I will pay it on the invoice raised by this person, I will avail ITC also, though material is lying with my job worker. Though material is lying with my job worker, whereas section 16 says material should deliver to you, here it is deemed that material is lying with me now because I have given to job worker for some treatment and ITC is available to me. I can avail and I can utilize also. So friends, whenever there is any transaction related to job work, you can claim ITC, but here the condition is this material which is sent to job worker for job work purposes must come back to you within 1 year time. You cannot keep this material with job worker for more than 365 days from the date of invoice when material was supplied to job worker. In that case, ITC will be reversed along with interest. Otherwise, ITC is available to you. Sometimes friends, it happens when we send capital goods also to the job worker for production purposes, because I need particular process and my job worker is not in a position to have that process or that equipment or that machinery with him, and otherwise it is a costly affair for me. So I facilitate my job worker by giving him a machine to fulfill my own requirement. Law permit also that. So this machine, my capital good, will be supplied directly to my job worker. Though it is installed at job worker side, ITC is available to me. I can avail and claim and utilize it. But here law says this machine, this product should come back to you within 3 years. So within 3 years, this machine should come back to you. So again, here question is, if it is possible to bring machine just for the compliance of the law, because my production is still going on and it will go for another 10 years. But provision says it must come out from job workplace to you. You may send back again. So there is set procedure, but important is, yes, I can avail ITC. So if this machine is of 1 crore rupees and GST is 18%, or it may be an imported machine where I have paid 18% GST, 18 lakh rupees ITC is available to me. That's a big relief. So friends, as I told you, if this machine doesn't come to you after 3 years, the ITC you availed, that is 18%, that is 18 lakh rupees, has to be reversed. It will be treated as sale to the job worker. Friends, it is another important aspect in GST, especially in case of industries of automobile sector. Because we have so many components in automobile sector or engineering sector, and these components needs molds, dies, and sometimes dies are given by original supplier, means manufacturer of automobile sector, to its vendors or its job worker. So these dies or molds have their own cost. Or if ITC is available, answer is yes, ITC is available. Because dies or molds are lying with job worker for my own production, so ITC is available. Friends, it is another aspect, input service distributor. This is another category of a person under GST. What is that? Friends, in big companies which has its operations across India, they have policy of procurement of important material at headquarter level, means they have centralized purchasing. If any company is having its offices across India in different states, 10 to 15 states where they are having their operation, but they have procurement policy that procurement will be done at headquarter level for certain items. Then what will happen? Because GST is a consumption based tax, as you know. So all vendors from whom the company is procuring, the company is giving its purchase order to these suppliers in such a way that the company is asking, send bill to headquarter and supply material to my units or to my locations, different locations, different states. So company having head office in Mumbai, having 26 offices in different states of the country, and the vendor or the supplier from Karnataka sending material, means raw material or whatever they have procured from them, to their different offices or locations from time to time. And for each dispatch they are sending invoice to their Bombay office. So here question is, material is going to respective states where they are having their office or unit or locations, and bill is coming to Mumbai. And when Karnataka party is raising bill to Mumbai, they are charging IGST by mentioning Mumbai office. But material is actually consumed in different 26 locations in the country. So this company at head office, though having GST number in Maharashtra for their head office, they will take another additional number in the name of ISD. Why so? Because this company is having centralized procurement policy. So Karnataka supplier will raise invoices to this number, because this company having GST number for separately in Maharashtra and also having GST number as ISD for centralized procurement. And because this material is not being used in head office, it is being used in different 26 locations. So ITC should be shifted to, or the tax should be shifted to location where material is consumed. So this ISD sitting in Mumbai, this company will raise or transfer this procurement through its own invoices to respective locations by charging IGST, or as the case may be CGST or SGST, if they have office in Maharashtra also other than head office. So this company also, this ISD will also file their taxable returns every month. So whatever they will procure for other locations, it will be their inputs, and when they will raise invoice to them, it will be their outward supply. They will set off their inputs ITC against their outward supply, and respective units will get their ITC based upon the invoices raised by ISD, though payments are made by Bombay office only. So this is the ISD concept in GST, and this way ITC is shifted when companies having procurement centralized, though material is consumed different states, but their procurement is at head office level. So ITC is available to the respective units where material is finally consumed. Friends, I told you that companies are having so many business propositions nowadays. So GST has taken care of almost each and every transaction of the business, so that ease of doing business and benefits can be given to the industry to the extent. So here again a question comes, can a registered person who is a normal dealer, normal taxpayer, transfer ITC to other place unit if he has obtained additional new registration within the state? So if a company already having GST number in a state and has started operations in another location with different unit under the same company, can they interchange, they can share ITC? Yes, they can. They can. So friends, we all know that on our procurement, we pay GST. And there are some transactions, as mentioned earlier also, where GST is not paid by supplier to government, but paid by buyer or recipient to government. In case of advocate services, advocate raise bill to the company, but he does not charge GST in his bill because he is not supposed to, because transaction with advocate is covered under reverse charge mechanism, RCM, section 9(3) of CGST Act, charging section. Similarly, services of goods transport authority, transporter, if he is covered under 5% category, he will not charge GST to the service recipient. Rather, company will pay, the recipient will pay GST at the rate of 5% on transport services. So, in either case, the recipient is paying tax. Majority cases, he is paying tax through supplier, but on specified transactions, he is paying tax directly to the government under reverse charge mechanism, and in this case also, he is entitled to ITC, he can avail ITC, subject to conditions of section 16 and section 17. He is eligible for that, he can claim ITC. But here the only condition which is not otherwise in other cases, whenever this RCM transaction come into picture, recipient is supposed to pay tax by cash only. He cannot set off this liability against the ITC available to him in his credit ledger. Here RCM tax is always paid in cash and ITC is available to him. So friends, this was the total procedure of ITC. Importance of ITC, as I told you, section 16, section 17, section 18, section 19 of CGST Act are very relevant from business point of view. It's a cash, hard cash. So its management is very important. Non-availability of ITC or wrong availability or wrong availment of ITC will cost to the business and can create problems also. So friends, I have gone through all the provisions of the law, and here is section 16 as drafted under CGST Act. When we are dealing with tax matters, we must understand how the law is written. So just for your reference, this is the actual language drafted under the law, section 16, which talks about eligibility and conditions for taking input tax credit. This is the title under the law of this section, and it says every registered person, means the person who is having GST number, shall, subject to such conditions and restrictions as I explained you of section 16 and 17 itself, as may be prescribed and in the manner specified in section 49, that is payment of taxes, be entitled to take credit of input tax charged on any supply of goods or services or both to him, means tax charged to him for his procurement, his buying, which are used or intended to be used in the course of or furtherance of his business. Means ITC is available for the taxes paid on inputs which are used by this person, means the registered person, for his business. And if he is using such procurements for personal purposes, then ITC is not available. And the said amount shall be credited to electronic credit ledger. There is a ledger maintained by GST portal, we will discuss in return chapter, and that amount, whatever he has paid to his supplier, he will claim it in his monthly return of GST 3B, and the same will be available to his credit ledger at GST portal. So friend, this way you are supposed to read legal provisions of the law, understand them properly, and then execute.